Next up, I have the pleasure of hosting a fireside chat with the management team from Linsay Corporation. Linsay is a global leader in providing a variety of proprietary water management and road infrastructure products and services. The company has been involved in the manufacture and distribution of agricultural irrigation equipment since 1955 and has grown from a regional company to an international water efficiency solutions and highway infrastructure firm with worldwide sales and distribution. Joining us here today from Linsay is CEO Randy Wood and CFO Brian Ketcham. Randy was appointed CEO of Linsay in January 2021 after previously serving as COO. He first joined the company in 2008 after spending 11 years with CNH in senior marketing and sales roles. Brian joined Linsay as CFO in April 2016 after spending 15 years at Valmont, including as Vice President and Group Controller for the Engineered Support Structures segment. Linsay has 11 million shares outstanding. The stock trades around $120, $1.3 billion market cap, just $9 million of net debt, $1.3 billion total enterprise value. Randy and Brian, thank you very much for joining us today. I'll kick off our fireside chat, and for all you in the audience, if you have a question, please just raise your hand and we'll get you the microphone. Wanted to start with Linsay's core irrigation business. And if you could help us think about some of the mega trends driving demand in that part of the portfolio, both in North America and internationally over the next several years.
Yeah, I'll start with that one, Brett, and good morning. It's a pleasure to be here. I think one of the big ones, and these mega trends really kind of cross over both the international and the domestic U.S. business, and one of the biggest ones is population growth. And you look at the need to increase food production by 70% by 2050, according to FAO with United Nations. You look at irrigated acres covering roughly 20% of the world, but it produces 40% of the food. So we know irrigation is going to play an important role in feeding a growing world. You look at climate change, or maybe it's the uncertainty of weather, and is it going to rain this year or not? And you look at the sunk cost that our customers have when they plant a field of corn. You need certainty that you're going to have the moisture and the rain or the water that you need through an irrigation system to bring that crop to harvest. So certainly weather uncertainty, climate change is a big one. There's an ag tech explosion right now with our customer base really linked to conservation and sustainability. We can play an important role there. And we certainly see a lot of consolidation around the world. Farms getting bigger, labor becoming tougher and tougher to find. And the ability for technologies like ours to help them leverage and scale so they can get bigger, they can get more efficient, they can get more profitable. We can play a pretty important role there. So that's a handful that I think really apply to both our domestic and our international business.
Maybe on the subject of weather uncertainty, Randy, can you help us think about, we've seen droughts both in the U.S. and internationally, how that impacts demand for your products and services, either positively or negatively?
Yeah, drought's an interesting market driver for us, and we've said a couple of times, drought's good until it isn't. And there's a certain level of drought and water uncertainty that can be very healthy for the business. And if you think about the sunk costs our customers have, and if your big uncertainty or unknown is it going to rain this year, you're probably going to invest in an irrigation system so that you know you're going to have the right amount of water at just the right time. So that's where drought can be strong for us. And again, the uncertainty of rain can be strong for us. We're starting to see now in some parts of the U.S., and we've got a very prominent drought that starts in the panhandle of Texas through Oklahoma, Kansas, up into Nebraska. If drought is so significant that there's not enough water, there just isn't enough water in the aquifer and the surface waterways to finish a crop and bring it to harvest for our customers to harvest it, sell it, to make their revenues, then it becomes detrimental to the business. So it's something we watch very, very closely. And in general, we want to be on the front end, helping our customers stretch their water as far as they can with just the efficiency of our mechanized irrigation solution, but also the digital tools that allow them to understand exactly the right time to apply the exact amount of water so that we can stretch that water supply just as far as we can. So drought is good until it isn't, is probably a good way to describe it.
We've spoken about food security, probably heightened after the war in Ukraine. sounds like there's a large international irrigation project opportunity funnel. Can you help us think about how you compete in some of those international markets against low-cost regional or local competitors, how you win in those areas?
You do see in different parts of the world, depending on where you are, certainly in Brazil, in Western Europe, Central Asia, Sub-Saharan Africa, we see local competitors in all the markets where we work to compete. And I think there's a big difference with quality and ingenuity. And you look at a large company, global multinational like ourselves, we've got a lot of automation. We got a lot of quality controls. So I think just on the structural side, we like to think we've got an advantage there. We've been doing it a long time as well. So we feel like we do have some quality advantages there. And there's a certain amount of American-made brand equity that I think we can take around the world. But more importantly, I think two big differences that stand out when we compete for these projects. One is the technology, one that we can bring to the larger customers in particular. And if you look at labor availability, you've got to be able to run these big farms with technology that gives you scale. And using products like our FieldNet, which is basically a control system in your pocket. We've got customers that have hundreds of machines managing their irrigation with a handful of service people. So the ability to put technology over top of these large projects is a big differentiator for a company like ours, and you just don't see those smaller local competitors that just don't have the mass to invest in platforms like that to develop them and support them, more importantly. So I think that's a big advantage. And the second one, again, being a large company with scale, we've got resources that we can take to these projects. And a project isn't just about selling a couple of hundred pivots, shipping them to the field and putting them up and hoping they run. There's a lot of work up front in engineering design, making sure we've got the optimum layout, making sure we're addressing topography, what's your energy source, what's your water source, and having an entire team based approach, really assess these projects from start to finish. How are you going to run it and operate it? What's your investment in capital up front versus your ongoing operating expense? And bringing a team with a company like ours is a significant differentiator because you don't see that type of resource base in a smaller local competitor. So it can be a big differentiator for us.
And what do you see from customers in terms of receptivity and maybe the runway for adoption for technology solutions in North America as well as some large international markets, including Brazil?
Yeah, technology adoption is, it's been on a rocket recently, and we look at the North American market, 50% plus penetrated in terms of a remote control telemetry device. Again, that's the pivot in your pocket, remote start-stop control. Internationally, those numbers are a little lower. Brazil, I know we've talked about specifically in the past. It's growing rapidly, but it's behind the U.S. in terms of total adoption. But we also have to think about technology adoption differently going forward. And we've talked a lot about, historically, it was one-to-one. You had one device on your machine in the field, and you would start it and stop it. So you had one subscription, one software as a service on that one device. That's the one-to-one relationship. Now we're developing more value-added subscriptions that leverages the same hardware. So not only can we have start and stop control of a machine, now we can provide expert system, artificial intelligence on how much water to apply, based on soil type, based on crop type, based on growth stage, based on weather and predicted weather. So now you have a subscription to start, stop. Now you've got a subscription to manage your water. We're working now and launching a platform we call Smart Pivot that really monitors the entire machine down to the component level. That's an incremental subscription on top. So now we're 3-to-1. So technology adoption historically has just been about penetration and getting that initial hardware onto the asset. Penetration going forward is going to be how many subscriptions do you layer on top of that device to really grow software as a service revenue, but more importantly, create that value for your customers.
Excellent. If I could just add to that as far as the question on technology penetration around the world, one of the highest areas of technology adoption that we see is in Australia and New Zealand. And one of the reasons for that is they actually have to pay for the water that they use. And so, technology is even more important. They have to report their water usage. And I think more recently what we've seen is they have to be able to prove when they did irrigate, was it necessary to irrigate? So, when you look at across the globe, again, North America, pretty good penetration on technology. But Australia, New Zealand, by far is ahead of everybody else, and it's really driven by the fact that they have to pay for the water.
Moving to the infrastructure side of the portfolio, now the U.S. Finally getting serious about investing in our physical infrastructure. We had the passage of the IIJA. Can you help us think about, how that can benefit both your road zipper, movable road barrier system, and your other infrastructure safety products?
Yeah, I mean, any additional funding into roads and bridges benefits our business, and we've said that the additional federal funding through the IIJA should provide some tailwinds to us. Coming into the fiscal year, we said, the second half, which is going to be the road construction season in the U.S., we should start to see some of that coming through. I think, what we're seeing is, the expectation of when that funding actually hits the projects is a little bit slower than what we anticipated. If you go back, the law was passed and signed in November of 21. It wasn't until March of 21. And then in March of 22 is when the actual appropriations were made to the states, and which and then allocated the funding to the states, and now it's up to the states to put those projects into play. And so depending on what the state is, there's some hoops that they have to jump through in terms of getting that federal funding. So it's definitely going to be beneficial, I think, for us, probably more so in our fiscal 24, but we'll start to see some of it in the last half of our 23.
Great. See if there's any questions from the audience at this point. If you do have a question, feel free to raise your hand and we'll get you the microphone. Otherwise, sticking with infrastructure, you have a pretty unique offering with the Road Zipper. Can you help us think about the changes you've made organizationally to better tap into and sell to Department of Transportations across the country?
Yeah, it was, I think back in 2019, we put in what we called Shift Left. It was a change in our commercial approach to selling Road Zipper. It used to be more of a technical sale, an engineer to an engineer, and it was addressing an existing problem, so maybe too much congestion on a bridge or a tunnel, but what we did is, because we're the only company that has this solution, so we're the only ones out there telling the story too. So we put in place some business development resources, sales resources, but also some government relations resources. And Shift Left was all about, we want to get a seat at the table when a state is planning a multi-year construction program, because Road Zipper can be used in a variety of different ways during the construction process. And we saw some really good traction in our fiscal 2020 year. We had a record year that year with Road Zipper. Then when the pandemic hit, we did see a slowdown just because of it requires a lot of face-to-face meetings and involvement with travel restrictions, and then government priorities kind of shifted away from infrastructure at that point in time to pandemic response. But now as the economies have opened up again, we're seeing that the benefit of that, because it's really, we've got a large sales funnel for Road Zipper that we talk about a lot. For us, the challenge is moving those projects through the sales funnel, but changing that commercial approach has really helped. And we've also, by getting involved in some of the construction programs, added a higher level of leasing for Road Zipper. So during a construction program, you might have a state that has several projects going on at one time, and Road Zipper can be used as part of the construction program to speed things along, or it's also provides worker safety and motor safety. So there's a lot of different applications there, but we're seeing some good traction from that change in commercial approach.
Great. We've spoken about technology on the irrigation side. What opportunities do you see to incorporate more technological aspects into your infrastructure offering, and how do partnerships play into that?
Technologies in providing and creating efficiency for your customers, it doesn't matter which side of the business you're on for us, and it's really an interesting story. We developed FieldNet on the irrigation side of our business Because when you talk to customers, they were driving out to start a machine, driving out in the middle of the night to monitor a machine, driving out the next day to stop a machine. Tremendous amount of driving and manual labor. And we changed their lives, their quality of life. We gave them more time at home. We gave them more time to market their grain and run their business because they had less time driving remotely, starting and stopping machines. When we talk to our infrastructure customers, particularly in the roadway safety business, we have Department of Transportation employees that literally get up in the morning and jump in a truck and just drive around, looking for crash cushions and end terminals that have been impacted. And we said, that sounds a whole lot like irrigated customers driving around, starting and stopping pivots. So we literally took our FieldNet platform, the hardware device, the remote telemetry unit, the cell phone in a box, we took it off the pivot and we put it onto an end terminal. We put it onto a crash cushion. And now we can have single resources sitting in a Department of Transportation control center. We created a new front end, a new customer experience, new UI for that particular customer segment base. But now if there's an impact in the city, in the country, now that flags, there's a red light now in the control center. So I've taken those trucks off the road, I've taken those people off the road, I've reduced my carbon footprint, I've reduced my energy consumption, and I'm providing better service because I've got real-time data that says something's just been impacted, I better replace it, so that the next car that passes by that crash cushion is going to be safe. So the customer needs and drivers were really very similar between two, what would appear to be disparate segments of customers. So we were able to scale that very quickly, get it to market very, very quickly, and we're just going through the sales process now and then the tendering process with those entities, and it's been successful because you're solving a problem that they didn't even realize they needed to have solved for them. The partnership element is another good example. What we discovered is you're in the control center and you see the alert that something's been hit. Well, geez, now I gotta send somebody out there now, and I don't know. Do I need a lift truck? Do I need a box of bolts? Do I need a completely new crash cushion or not? So how can we help with that? So we've partnered with a company named Linsay. And we've actually made it an investment. It's a funny name, but Linsay is an imagery company that's partnered with companies like Lyft and like Uber, who has cars on the road, and they all have those real-time cameras. So now the customer experience is I'm in my control center, I see a red light, a beacon come on, okay, we just had an impact here, and now let me see if I can source a Linsay image. So we go through the cloud to Linsay, and Linsay says, yeah, we just had a Lyft driver 38 seconds ago. Drove past that impacted crash cushion. I can bring that image now into the user experience, and I don't even have to send somebody out there immediately to understand. If it was just grazed, you know what, that's no big deal. That's not a high priority for us. If it was a significant impact and that crash cushion has now been completely collapsed, that's a different service experience. So the ability to scale and leverage technology from one segment to another and create a very unique, differentiated customer experience using partnerships and imagery specifically, it's been a lot of fun. And when you talk to a customer about how you can change their world like that, it's pretty inspiring.
Absolutely.
Brett, we do have a question here to your right.
Great.
Yeah, on the ag tech theme, I'm curious if you see a kind of potential solution with Brazil and like rainforest destruction. I know it's different from irrigation, but if you see any way that ag tech could help with addressing the incentives farmers have with that, or if that's more of a political issue or what that might be.
I think our goal would be to help produce more food to feed a growing world just as efficiently as we can. And if we can play a role in that by helping manage water with our hardware, our equipment, and with our technology, then that's a role that I think will fill the. I'm not too sure on the political nature of some of the other decisions that are maybe being made locally, but I know we can help conserve water, conserve energy, and produce more food for a growing world, and I think that's really where we put our focus.
We touched on the fact that Lindsay has a very strong balance sheet right now. Can you help us think about the steps you've taken internally in terms of building up resources to potentially execute some strategic M&A over the near to medium term?
Yeah, there's a couple things, and again, you're right. We're in a position now that we're blessed with a strong balance sheet. We've got to put that to work for our investors. We have just recently, I think one of the most exciting changes we've made recently is the addition of a gentleman named Brian Magnuson, who's been with our company 10, 12 years. Grew up on a farm, well-educated, great guy. He's now been put in place on our senior leadership team as our Senior Vice President of Strategy and Business Development. It's really his job to help us find good companies, good M&A opportunities. And I think process-wise, that's allowed us to, number one, develop stronger relationships with investment banks that are looking for opportunities for us. But I think more importantly, it's really allowed us to treat M&A like a funnel, like an opportunity management funnel, where we're now identifying segments, parts of the world that are attractive to us, and we find good companies in those spaces, and we have the opportunity to make an outreach. And not every company is for sale when you're ready to buy it, but I think getting it in the funnel, establishing a relationship, establishing trust, really marketing Lindsay as an opportunity for those family-owned businesses in particular to find a home as part of their succession plan. You've got to have a resource, I think, dedicated to developing and stimulating and cultivating those relationships, and that's probably the biggest change for us now that we've added that resource, and we're in the market and active and do see a lot of really good opportunities. Kind of that nexus of water and technology is what's core to us, and there's other periphery companies and industries that could fit into that space ultimately. So I think we're excited about the opportunities, and I look forward to hopefully having some news for all of you soon.
Excellent. And can you help us think about, maybe geographically as well as, will possible M&A opportunities span across both sides of the portfolio?
Yeah, geography from an M&A perspective, in my view, we're fortunate to be a global company. We've got operations in South Africa, in Brazil, in Turkey, in Italy, in France, in the US, and China. So we're not in a position where we have to say, listen, we've got a footprint in these two countries, that's where we have to focus. We can really operate a business anywhere in the world, and I think there are opportunities, a lot of opportunities are going to be global, are going to be international. So for a company like us, there really aren't any limitations on where we'd go, where we'd look. We'll find the best opportunity. Where it's located, I won't say it's irrelevant, but it's not at the top of the list in terms of how we decide. And when we look at both infrastructure and irrigation, there are a lot of opportunities. That the case I shared a moment ago about leveraging FieldNet into a product called Impact Alert and Road Connect and infrastructure. There's a lot of things that we think can go back and forth. So again, the nexus of technology and water is what's most important, but I think we can stretch that and leverage that into the infrastructure business as well. So we see opportunities in both sides.
Excellent. Maybe from an internal investment standpoint, can you help us think about the investments you're making in terms of capacity as well as productivity across the footprint today?
Yeah, I could take that one. And I would say that the areas where we've seen the most growth outside of North America, Brazil, obviously, and then Turkey, which serves that Northern Africa, Middle East, Eastern Europe area. We've made some investments in both facilities over the last couple of years. I would say it's been, I'll take Brazil as an example, just not significant from a capital standpoint, but just how materials flow through the facility and setting up another kind of a third party where we can handle some of the ancillary, like pumps and pipes, where it all went through the factory before, which really has allowed us to double the capacity in Brazil without significant investment. But if we look longer term, we consider Brazil is going to be a long-term growth market for us. That would be an area that we would look to spend more capital. Turkey, again, it's been, we did some things with the shipping and loading process to increase the capacity and flow through there, but not significant from a capital standpoint. As we look at the U.S. operation, again, in the U.S., labor is becoming a bigger and bigger issue. So looking at productivity, automation type opportunities and things that would over time reduce the labor content. That's where we're focused on the CapEx.
Excellent. Yes.
Want to get the mic?
Thank you. My name's Steve Clapham from Behind the Balance Sheet in London. I followed your company many years ago, and I was particularly attracted to the irrigation segment. Most company management think their shares are undervalued. Can you tell us how should we think about the valuation of the two different components of your business?
Yeah, I think I think we've evolved over time, from maybe being viewed as more like an industrial to where now, we're in the kind of water peer group, which obviously has a lot higher multiples than what we do. But I think that the combination of water and technology, and as we go forward with water being, more and more of a constrained resource, I think kind of that's where we see a lot of interest in European investors for that reason, ESG, sustainability. So I think, I've heard, I hear from investors in the U.S. as well as internationally, and some might think our multiple is high and others think it's low, but at the end of the day, I think it's the long-term growth opportunities that we offer and then being in that water space.
My question is really about what, obviously the irrigation business would attract a much higher multiple than other business. You just talk about the gap, the difference between the valuation, the way you think about it internally, and how does that influence the allocation of capital?
Yeah, I think it does have an influence on how we look at capital allocation between the two businesses. I think primary focus would be on the irrigation water space. I would say on the infrastructure side, it's going to be more of an opportunistic, if something comes along. But from an overall capital allocation standpoint, there's clearly the multiple is driven by the irrigation water side of the business.
Take one last question.
As you said, a drought is good until a drought is not so good. Are you doing any upstream evaluations or investment opportunities in aquifer refurbishment or desalination? With your skill set, it seems like a natural extension to your business.
Yeah, there are some interesting technologies, and I was interviewed on a radio show out of California last week, and they said, okay, if you were the water czar, what would you do? What would you do differently? And one of the answers I had was related to aquifer recharge, which we've got some experience with through an engineering division, desalination, cloud seeding. I think there are a lot of things that probably don't even seem possible or realistic or profitable right now. But if our water stress situation around the globe continues to grow and evolve, then we're going to have to look for transformational technology. So I think it's an area of curiosity for us right now, and we look 10, 20, 30, 40, 50 years down the road, we're going to need technologies that don't exist today. And I think that's probably true in many parts of industry, certainly in water and water management. So I can't say that we've got an active investment program on anything that we think is the silver bullet that's going to solve that problem, but I will say we're talking philosophically, strategically about our M&A approach, about our product development approach with those 10, 20, 30, 40-year horizons in mind. But there's not something that's on the launch pad today. But I think if you go forward, there's going to have to be for a company like ours or others.
Excellent. With that, we're bumping up against time. So Randy and Brian, thank you very much for being with us today.
Thank you.